Hey guys, how's it going? So I have a video to share with you, but in today's video we're going to be talking about which airline company could possibly go bankrupt in 2021. Possibly, but I'll share that information with you guys. But first I'm going to play a video of this guy who's sharing a video of someone else. So I hope you enjoy it, and then once the video is done I'll explain it more. So yeah.
There was an interesting video from a channel called Mentor Pilot. By the way, if you haven't watched his videos, Mentor Pilot, I do recommend watch the videos on that channel. The guy who makes them, I don't know his name, but he's a fantastic guy and is also very knowledgeable about the airline industry and what's happening right now with airplanes and pilots across the world. And I have to tell you, the picture right now is not very good for our pilots and our air staff out there. So let me just play for you a very short clip of what he just said recently.
So this would indicate that social distancing, especially within an aircraft, is going to be much more complicated than just taking away one seat. If you would go with the CDC recommendation of taking away every passenger within 6 feet, well then, instead of taking away one seat per row, you need to take away between 7 or 8 seats. Now, those of you who are skilled in maths will notice that if you take away one seat in a seat row with 3 seats, you take away about 33% of the passenger capacity in an airliner. And in order for an airline to break even, to start making money, you need to have a load factor of between 75% in the really effective airlines up to maybe 85-87% in the ones that are less effective. So by taking away 33%, you are effectively making it almost impossible to make any kind of money without increasing the prices steeply for the passengers who are still traveling. And if you wanted to take away, to give the 6 feet rule, it is impossible to continue an airline. And this is exactly what, for example, the CEO of Ryanair went out and said during the week. He said that if the rule of taking away the middle seats enforced, Ryanair will just not fly because it's not financially viable to do so.
So guys, as you heard there, Mentor Pilot's absolutely right. There's no way a lot of these companies can remain profitable if we're going to do this social distancing rule, 6 feet, 6 seats apart, things like that. Now, I have to tell you, I do feel sorry for the pilots that have been laid off work right now, pilots and air staff being laid off work. But let me tell you who I don't feel sorry for. A lot of these airline companies. In fact, let me just show you this. As I'm sure you've heard, a lot of these airline companies have had massive bailouts, billions of dollars in bailouts. Here's one example. United Airlines just got a bailout of $5 billion, okay? And get this, not only did they get a bailout, so not only did they get their billions of dollars in bailout money, and they still have the audacity to lay off workers. Look at this. This came in the news just recently. United Airlines tells staff to take 20 unpaid days before October and will lay off 30% of them. So, it's just so rich, isn't it? They take the taxpayer money and they still lay off their workers as well. So guys, that is just typical corporate socialism. Just remember, guys, as I mentioned to you in a previous video, Wall Street does not care about capitalism. Wall Street lies when it says it's pro-capitalism. What they really want is corporate socialism. Socialism for the rich, not for the poor. By the way, Mentor Pilot was saying in his video, most recent video, that some of these airline companies could go bankrupt. Okay, so it's possible some of the famous names out there, I don't know which of these could go bankrupt actually, but we'll take a look at the chart of some of these in a few minutes. But it's quite possible that a few of the airline companies that we've heard of so far, some of the legacy airlines, could eventually go bankrupt in the very near future. So I do feel sorry. I have to tell you, I do feel sorry for the pilots out there, because I do know we have some subscribers and viewers who are pilots, and I do feel sorry for the airline staff as well. But the people I don't feel sorry for are the corporations who are just absolutely greedy.
I'm gonna end it there, but if you want to see the rest of his video, you can check out his channel. You can try to type in this title right here. But anyways, moving forward, so okay, that was not supposed to be on there. I think this one was a little extra, but just look at that balance sheet. I think it's gonna get a lot higher. But anyways, we'll move forward from there. So American Airlines received $5.8 billion in payroll support from U.S. Department of Treasuries. In order to get this, they have to keep the employees on a payroll at all times. So payroll support program recognizes extraordinary dedication to our entire team and important, sustainable, and critical service. But anyway, so they're receiving some money. They're receiving a bailout for the employees. But is it enough? Because American Airlines, out of all the airlines, is in the worst condition at the moment, in my opinion. If we look at the cash position, right? They have $3.5 million in cash, short-term investments of. Wait, hold on. Current liability. Other short-term investment. That's actually interesting. I didn't notice that before. Oh, wait. No. I made a mistake. So their cash and short-term investment is $3 billion. Their current cash value is $474 million. And out of all the airlines, American Airlines has the most liabilities. They have not liabilities. They have the most assets. They have the most airplanes. And if airplanes are not being used, like they're total non-current. Man, Yahoo's been annoying. They've been changing their structure, and it's really annoying. I know how to work across it, but it's annoying. They have almost $60 billion of asset in planes. The accumulation depreciation is helping them tax-wise. It's lowering the plane prices, but at the same time, they still have $59 billion of total assets in planes. And when a plane is not being used, it becomes a liability. So you have to take maybe like 75% or 80% of their planes and turn them into liabilities, because if they're not in use, they become a liability, in my opinion. So it's just like a house, for example. A house, like let's say you bought a house, but you cannot get renters in it because you bought a house, you mortgaged the house, but you can't get renters in it. You're still paying for property taxes, you're still paying for heat, you're still paying for your mortgage, but you're not getting any renters. So that house that you bought no longer becomes an asset, it becomes a liability because you're not making any money off of that house. It's the same thing with the plane concept. American Airlines has so many planes, and they pay just to park the planes, and they basically pay to park the planes. They're not being used, so those planes actually become a liability rather than an asset until they become functional again, which may not even happen for a very, very long time, from this whole scenario that we're in right now. And these airlines are not making profit. Every plane that takes off, they're losing lots of money because of the video I showed you earlier. So moving forward, now like we're having news that New York hospitals falling to March levels, so it's getting worse again. The scenario out there is not getting better; it's getting worse. And if we look at the total number of cases, it's still going up in a straight line. It's still not flattening. Every day it's like increasing more and more and more, and people are not trying to prevent it. There's protesting all over the world right now. People are fed up being locked in their homes. They're like, free America. So what happened? We have a second wave because the United States let people out of their homes again. More people get infected. Virus mutates, and the more the virus mutates, the harder it is for the government to deal with it. So, this is really bad. This kind of scenario is really bad because a vaccine could work, but what happens if the virus mutate? Then the vaccine is no longer viable. And there's a new strain of coronavirus out there that is not adapted to the vaccine, and people are still getting really sick and still going to hospitals. That would be like really bad right now. Like if you look at the hospitalization, somebody has to pay for that, and who's paying for that? It's the taxpayers' money. So, and right now there is no taxpayer money because nobody's working. So the government is printing up fake digital money to cover for this, and who's going to pay for it in the long term? It's the workers, it's the taxpayers. They're going to have to increase tax. Once this scenario goes away, things are not going to go back to normal. Taxes are going to go up massively. People are still going to, feel the pain from this from years down the road because of all the money printing the government's doing right now, in my opinion. So, I think we're going to be in a Great Depression for a long time, and I don't think we're going to get out of it. That's my opinion only. Some people have an other concept, but of course the government can fake the stock market. The government is faking the stock market, forcing rich investors, retail investors, and everyone to go back into the market because people are addicted to the market and they will not stop trading the market. So if the government shows that, then yes, there's going to be trading in the market for sure. Some of the stocks that I think is safer than most would be Zoom. Zoom is benefiting big time from this isolation, and other companies like Microsoft, Facebook, Google are going after Zoom video communications customers. Will they be successful? I don't know. We'll see. It's Zoom is a free software, and their loyal fans will pay for their software service. So I hope Zoom be around. I like competition. I like innovation. I like the CEO, and I hope to see him succeed with Zoom. But we'll see. Zoom is kind of overvalued at $43 billion. I have to say it's overvalued because even if they make $1 billion of revenue, it still doesn't per quarter. It still doesn't justify a $43.36 billion market cap. I say Zoom would be a trade rather than a buy. So if Zoom crashes really hard and you see a bounce, buy into that bounce because it's probably going to keep going up. Not financial advice. And there's other companies to go to invest into. So I'm just saying that Zoom is probably benefiting big time from this. But again, there's better companies to invest into than Zoom, in my opinion. Facebook is also safe too because people are not going to quit their social media, and Facebook is extremely profitable. Maybe they'll suffer a little bit short term and there might be a crash, but that crash could lead into a buying opportunity, in my opinion. Beyond Meat, I like Beyond Meat. I don't know where Beyond Meat's going. If it crashes back to $100, it's a buying opportunity. If it goes to $65, it's a no-brainer. If it goes higher, then I'm happy. But I think Beyond Meat is benefiting big time from the meat shortage. That's my opinion. So yeah, Netflix I think is also another company that's going to benefit big time from this scenario that we're in. But Netflix is extremely overvalued at $191 billion market cap. But they are benefiting hugely from this scenario that we are going through right now, in my opinion. Just my opinion. So yeah, and then some of the tanker stocks, I'd say the lower it goes, the better. You will be still getting huge fat dividend payments from them, and they could double your money. They could double your money in the future. Like Scorpio Tankers at its height in December was $40. It's trading at $19.43. So if it goes back to $40, you will be making double your money, which is still pretty nice. Northern American Tankers, a trade. If it goes down to $4, I think it's like a buy. If it goes any lower, it's basically, in my opinion only, a no-brainer. But that's my opinion. TK Tankers also undervalued, $650 million, in my opinion only. It could go higher. You could make, 30-40% of your money back. Frontline Ltd, also they're making mad money, and you could, make 30-40% of your money back and get still pretty good dividends. So they're making a lot of money. I think Frontline is gonna make a lot of money. They're a big company. So that's what my opinion is. Anyways, that's it for my video. Thanks for watching, guys. I hope you enjoyed this content. Give me a thumbs up. It helps my channel grow. Subscribe for future updates and have a great day. Bye.